Prepare for impact. The world's economy is on the brink of collapse. In this video, we'll be delving into the harsh reality of a financial recession and the impact it can have on our lives. The slowing global growth and increasing fears of a worldwide recession have been dominating the headlines, with experts warning of the long-lasting and devastating consequences that it could have on people in emerging markets and developing economies. While a financial recession can be a difficult and challenging time for businesses and individuals, it's not the end of the world. In fact, the global economy has weathered many recessions over the years and has always recovered and continued to grow. In this video, we'll explore what a financial recession is, its causes and consequences, and how individuals and businesses can adapt and thrive during this period. So, without further ado, let's get started. World Bank President David Malpass expressed his worries about the slowing global growth, which is likely to worsen as more countries experience a recession. He fears that this could have long-lasting and devastating consequences for people in emerging markets and developing economies. To tackle this issue, policymakers should focus on increasing production instead of reducing consumption to achieve low inflation rates, currency stability, and faster growth. Malpass suggests that policies should prioritize generating more investment, improving productivity, and better capital allocation, as these are crucial factors for economic growth and poverty reduction. A financial recession is a significant economic downturn characterized by a substantial decrease in economic activity, employment, and overall business performance. During a recession, the GDP of a country falls, and the financial markets experience a significant decline in asset prices. There are many causes of a recession, including global economic conditions, trade wars, geopolitical instability, financial crises, natural disasters, and pandemics. One factor that can contribute to a recession is a significant reduction in consumer spending. This happens when consumers become uncertain about their economic future and decide to cut back on purchases, causing a chain reaction that leads to reduced business activity. Another factor that can contribute to a recession is a decline in investment. When investors become uncertain about the future, they're less likely to put their money into businesses or new projects. This can lead to a reduction in business activity, a rise in unemployment, and ultimately a recession. The impact of a recession can be severe and long-lasting. One of the most significant impacts is a rise in unemployment rates. As businesses reduce production and cut back on employment, workers are laid off and can't find new jobs. This can have a ripple effect on the economy, and those who are unemployed reduce their spending, causing further reductions in economic activity. Another impact of a recession is a reduction in business activity. During a recession, businesses may see a decrease in demand for their products or services. In response, they may reduce production or even close their doors, which can lead to more layoffs and further economic decline. The stock market and other financial markets can also be severely impacted during a recession as investors become more risk-averse. They sell off their assets, causing asset prices to decline. This can lead to a significant loss in wealth for individuals and businesses that have invested in these assets. Governments and central banks often respond to a recession by implementing policies aimed at stimulating the economy. These policies can include interest rate cuts, increased government spending, and financial support for businesses and individuals. The goal is to increase economic activity and restore consumer and investor confidence, which can help bring an end to the recession. Overall, a financial recession is a period of economic contraction that can have far-reaching consequences on businesses and individuals and the overall economy. The key to weathering a recession is to remain flexible and adaptable, finding ways to reduce cost, increase productivity, and keep pace with changing market conditions. With the right strategies in place, businesses and individuals can emerge from a recession stronger and more resilient than before. Can a financial recession lead to the end of the world? While a recession is a significant economic downturn that can have far-reaching consequences, it's not the same as the end of the world. During a financial recession, businesses and individuals may face economic hardship, including reduced employment opportunities, decreased consumer spending, and lower asset prices. These conditions can lead to social unrest and political instability, which can exacerbate the situation. However, it's essential to understand that a financial recession is a cyclical phenomenon, and that it's a normal part of the business economic cycle. While some recessions may be severe with long-lasting consequences, history has shown that economies can recover and thrive again. In addition, the global economy has shown a remarkable ability to adapt and evolve, even in the face of significant challenges. Governments, central banks, and other institutions often take steps to mitigate the impact of a recession, such as implementing monetary and fiscal policies aimed at stimulating the economy, and these measures can help accelerate recovery. Therefore, while a financial recession can be a difficult period for business and individuals, it's not the end of the world. Rather, it's an opportunity for resilience, innovation, and growth as economies adapt to new conditions and emerge stronger on the other side. There is no direct relationship between financial recession and the end of the world. While a recession can be a severe economic downturn, it's not a catastrophic event that threatens the existence of humanity or the planet. A financial recession is a natural part of the economic cycle characterized by a significant decrease in economic activity, employment, and overall business performance. It is often caused by a range of factors, including global economic conditions, trade wars, geopolitical instability, financial crises, natural disasters, and pandemics. During a recession, the GDP of a country falls and the financial markets experience a significant decline in asset prices. Unemployment rates often rise and many businesses fail to survive the downturn. People's wealth is eroded as asset prices decline and consumer spending decreases. While a recession can be challenging, it's not an event that poses an existential threat to humanity or the planet. The global economy has weathered many recessions over the years and has always recovered and continued to grow. Governments and central banks often take steps to mitigate the impact of a recession, such as implementing monetary and fiscal policies aimed at stimulating the economy. These measures can help accelerate the recovery and mitigate the impact of the recession. It's important to note that social unrest and political instability can be a byproduct of a recession. The economic hardship faced by businesses and individuals can lead to protests, civil unrest, and other forms of political instability. However, this doesn't mean that a recession will inevitably lead to the end of the world. While a recession is not the end of the world, it can contribute to larger societal and developmental issues that do pose an existential threat. For example, a recession can lead to increased poverty and inequality, which can exacerbate social and economic problems. These issues can in turn lead to environmental degradation, resource depletion, and other issues that can pose a significant threat to the future of the planet. Furthermore, the conditions that can contribute to a recession, such as natural disasters, pandemics, and geopolitical instability, can also pose a threat to the planet. Climate change, for example, is a significant threat to the environment and can lead to severe weather events that can contribute to a recession. The COVID-19 pandemic is an example of how a global health crisis can have far-reaching economic consequences. In conclusion, while there's no direct relationship between financial recession and the end of the world, a recession can contribute to larger societal and environmental issues that can pose an existential threat. While governments and central banks take steps to mitigate the impact of a recession, it's important to consider the long-term implications of economic growth and environmental degradation. By promoting sustainable economic growth and addressing the root cause of poverty, inequality, and environmental degradation, we can help build a more resilient and sustainable future for humanity and the planet. So, we've learned that a financial recession is a significant economic downturn that can have far-reaching consequences on businesses, individuals, and the overall economy, and that while a recession can be challenging, it's not an event that poses an existential threat to humanity or the planet. Instead, it's an opportunity for resilience, innovation, and growth as economies adapt to new conditions and emerge stronger on the other side. Remember, the key to weathering a recession is to remain flexible and adaptable, finding ways to reduce costs, increase productivity, and keep pace with changing market conditions. That's all for this video. Hope you liked it. If you did, hit the like button and subscribe to Monetary Overwatch, and turn on the notifications so you never miss any videos. See you in the next video. Till then, take care, and thanks for watching.